something historic just happened in the global gold market, and most investors are not paying attention yet. Indonesia has taken a major step by launching a new bullion banking system that could reshape how gold moves, trades, and is stored around the world. This is not just another financial headline. This could represent a major shift in the balance of power within the precious metals market. For decades, the global gold system has been dominated by traditional financial centers, paper contracts, and established institutions. But now, a new player is entering the game, bringing with it the potential to change demand, supply chains, and investor behavior. The question every gold investor should be asking is this: is Indonesia quietly creating the next major force in the gold market? And if this movement gains momentum, what does it mean for gold prices, central banks, and everyday investors holding physical gold? Today, we will break down what this new bullion bank really means, why it matters, and how this could become one of the most important developments in the future of gold. The global gold market has always been shaped by power, trust, and control. For decades, the movement of gold has been influenced by major financial centers, large institutions, central banks, and established trading systems that determine how gold is priced, stored, and delivered around the world. But now a new development is attracting attention from investors and market observers: Indonesia's entry into the bullion banking space. At first glance, the creation of a bullion bank may appear to be just another financial development. But when you look deeper, it represents something much larger. It represents a country positioning itself more strategically within the global precious metals ecosystem. Gold has never been just a commodity. It is a form of financial security, a reserve asset, a symbol of economic strength, and a tool that nations have used for thousands of years to protect wealth during uncertain times. The emergence of Indonesia as a new player in this space raises an important question: why now? Why would a major emerging economy focus on building a stronger connection to physical gold at a time when global markets are experiencing increasing uncertainty, currency concerns, inflation pressures, and changing relationships between nations? The answer begins with understanding the role of bullion banks. A bullion bank is not simply a traditional bank that holds gold accounts. It plays a specialized role in the precious metals market by helping facilitate gold trading, storage, financing, and transactions between different market participants. These institutions create a bridge between gold producers, investors, governments, and financial markets. For many years, the global gold market has relied heavily on a small number of major financial institutions and trading hubs. These centers have had significant influence over how gold flows through the international system. But as more countries focus on building stronger financial independence and securing strategic assets, the structure of the gold market may begin to evolve. Indonesia's move signals that the demand for direct access to physical gold infrastructure is growing. This is important because gold is entering a new era where ownership, accessibility, and physical supply are becoming increasingly valuable. Around the world, investors are paying closer attention to the difference between owning physical gold and owning financial instruments linked to gold prices. Physical gold represents something tangible. It does not depend on a company's promise, a government guarantee, or a financial contract. It exists outside the traditional banking system. And throughout history, whenever confidence in financial systems weakens, demand for physical gold often increases. Indonesia understands this dynamic. As one of the largest economies in Southeast Asia, Indonesia has a growing population, expanding financial sector, and significant influence in regional markets. By developing a stronger bullion infrastructure, the country is positioning itself to participate more actively in the global gold economy. This is not just about creating another financial product. It is about building an ecosystem. An ecosystem where citizens can access gold more easily, where businesses can use gold as a financial asset, where institutions can manage gold holdings more efficiently, and where the country can strengthen its position in international precious metals markets. The timing of this development is also significant. The world is experiencing a period of major economic transformation. Many countries are reevaluating their dependence on traditional financial systems. Central banks have increased their gold purchases in recent years, showing renewed interest in gold as a reserve asset. This trend tells us something important. Gold is once again becoming a strategic priority. For decades, some investors believed that gold was becoming less relevant in a modern digital economy. But recent events have challenged that idea. Economic uncertainty, geopolitical tensions, currency fluctuations, and concerns about government debt have reminded investors why gold has maintained its importance for thousands of years. Indonesia's Bullion Bank initiative fits into this larger global movement. It represents a shift toward greater control over physical gold resources and financial infrastructure. Countries are increasingly looking for ways to strengthen their own positions rather than relying entirely on external systems. When a country builds its own bullion capabilities, it gains more influence over how gold moves within its economy. It can create more efficient markets, encourage domestic investment, and reduce dependence on outside financial centers. This is why the development deserves attention, because changes in the gold market rarely happen overnight. The biggest shifts often begin quietly, with infrastructure decisions, policy changes, and strategic investments that may not immediately attract global headlines. History shows that financial transformations usually start beneath the surface before they become obvious to the broader market. Think about previous changes in global finance. New trading centers, new reserve strategies, and new financial institutions often begin as small developments before eventually reshaping the entire landscape. The same possibility exists with the rise of new bullion institutions. The question is not only what Indonesia's bullion bank can do today. The bigger question is what happens if other countries follow the same path. What happens if more emerging economies begin creating their own gold infrastructure? What happens if nations increasingly prioritize physical gold ownership and reduce reliance on traditional paper-based systems? This could create a major shift in how global gold demand is structured. For investors, this development highlights an important lesson. The gold market is not only about price charts. It is about understanding the forces behind supply, demand, financial policy, and global economic strategy. Many people watch gold only when the price moves higher or lower, but experienced investors understand that the foundation of the gold market is built through long-term trends. The creation of new bullion institutions is one of those trends worth monitoring. It shows that countries are not simply buying gold, they are building systems around gold. They are creating networks that allow gold to function more effectively as a financial asset. And this could have consequences beyond Indonesia. The global gold market depends on confidence. Confidence in currencies, financial institutions, and economic stability. When confidence changes, investor behavior changes. When investor behavior changes, demand patterns change. And when demand patterns change, the entire market can experience significant transformation. Indonesia's entry into bullion banking represents a potential new chapter in this ongoing story. It highlights a world where more nations want direct participation in precious metals markets. A world where gold is not just stored in vaults, but integrated into modern financial systems. A world where emerging economies are becoming more influential players in determining the future direction of global assets. For decades, gold has been viewed as a safe haven during uncertainty. But perhaps the bigger story is that gold is also becoming a strategic asset in a changing financial environment. The rise of Indonesia's bullion banking system may be an early sign of a broader movement, one where control over physical gold becomes increasingly important, where new financial centers emerge, and where the global gold market begins to look very different from the system investors have known for generations. The gold market is entering a period of transformation. And one of the biggest questions investors should be asking is not only where gold prices are going, but how the entire system behind gold is changing. For decades, gold has moved through a complex global network of mining companies, financial institutions, trading centers, vaults, and investment markets. But now, a new development is beginning to challenge the traditional structure of how gold is accessed, stored, and traded. Indonesia's move toward building a stronger bullion banking system represents more than just a financial expansion. It reflects a growing global trend where countries are seeking greater control, greater transparency, and greater participation in the physical gold market. To understand why this matters, We first have to understand the difference between simply owning gold and controlling the infrastructure that supports gold ownership. Gold has always carried a unique position in the financial world. Unlike currencies that can be created through monetary policy, gold exists in limited supply. It cannot be printed. It cannot be manufactured by central banks. Its value comes from scarcity, trust, and thousands of years of recognition as a store of wealth. But the way people access gold has changed dramatically over time. In the modern financial system, many investors gain exposure to gold through exchange-traded funds, futures contracts, digital platforms, and other financial products. These instruments allow people to participate in gold markets without physically holding the metal. However, there is a fundamental difference between owning a financial claim on gold and owning the physical asset itself. This distinction becomes increasingly important during periods of financial uncertainty. When confidence in markets begins to weaken, investors often return to the physical qualities of gold. They want something tangible, something outside the traditional financial system, something that has maintained value across generations. This is where bullion banking becomes significant. A bullion bank creates the infrastructure that connects physical gold with the financial world. It allows gold to be stored, traded, transferred, and used in different financial applications. It creates a system where gold can move more efficiently between investors, institutions, businesses, and governments. For many years, this infrastructure has been concentrated in major financial centers. These established markets have played a dominant role in global gold trading. But the emergence of new bullion systems in countries like Indonesia suggests that the future of gold may become more decentralized. The global gold market may no longer be controlled by only a few traditional centers. This shift is important because financial power often follows infrastructure. The countries that build strong financial systems around important assets gain more influence over those assets. History has shown that whenever a nation develops strong financial capabilities, it increases its ability to participate in global markets. Banking systems, payment networks, commodity exchanges, and reserve strategies all shape economic influence. Gold is no different. A country that develops its own gold infrastructure gains more flexibility in managing its gold economy. It can improve domestic access to gold, support local investors, strengthen financial security, and create new opportunities within its economy. Indonesia's development in this area reflects a broader movement happening around the world. Many nations are paying closer attention to gold because they recognize the challenges facing the global financial environment. Rising debt levels, currency concerns, inflation risks, and geopolitical uncertainty have encouraged governments and institutions to reconsider the role of gold. Central banks have increased their focus on gold reserves because they view gold as an asset that carries no counterparty risk. This means gold does not depend on another institution fulfilling a promise. It is valuable because it exists independently. That characteristic becomes especially important when trust in financial systems is tested. The creation of stronger bullion infrastructure could change how gold flows globally. Instead of relying entirely on traditional markets, countries may begin developing regional gold networks. These networks could make gold more accessible, improve liquidity, and encourage more domestic participation. For investors, this creates a new area to watch. The future of gold may not only depend on mining production, interest rates, or inflation numbers. It may also depend on who controls the systems that connect gold producers with buyers. Infrastructure matters. When a country builds the ability to store, manage, and trade gold efficiently, it becomes a more important participant in the market. It gains a stronger voice in the global conversation surrounding precious metals. This is why Indonesia's bullion banking move could have implications beyond its own borders. Other emerging economies may look at this development and consider whether they also need stronger gold infrastructure. If more countries move in this direction, the global gold market could gradually become more diversified. A more diversified gold market could change traditional patterns of supply and demand. For decades, investors have watched gold prices through the lens of major financial markets. They have focused on futures exchanges, institutional trading activity, and economic reports from major economies. But the future may require investors to look beyond those traditional indicators. They may need to pay closer attention to physical gold demand, regional financial developments, and government strategies involving precious metals. Because gold is not only a market, it is also a strategic asset. Nations do not view gold the same way ordinary investors do. Governments often see gold as part of their long-term financial security. It can provide confidence during periods of economic stress and act as a reserve asset when currencies face pressure. This strategic importance explains why countries continue to invest in gold-related infrastructure. The development of a bullion bank is a statement. It says that gold is important enough to deserve dedicated financial systems. It says that physical gold ownership and management are becoming increasingly relevant in the modern economy, and it suggests that the next phase of the gold market may be shaped not only by price movements, but by structural changes happening behind the scenes. Many investors make the mistake of focusing only on short-term gold price movements. They watch daily charts, market reactions, and headlines, but major financial shifts often happen quietly before they become visible. The creation of new bullion systems is one of those developments that may seem small today, but could become much more important over time. The gold market has always evolved. From ancient trade routes to modern digital platforms, gold has adapted to every financial era. The current transformation is no different. As technology advances and global economic relationships change, the systems surrounding gold are also changing. Indonesia's Bullion banking initiative represents part of that evolution. It reflects a world where more countries want direct involvement in precious metals markets. It reflects growing demand for financial independence. It reflects a renewed appreciation for physical assets in an increasingly digital financial environment. The question investors must consider is whether this is simply a regional development or the beginning of a much larger global trend. If more countries begin creating their own bullion networks, the traditional gold landscape could look very different in the years ahead. The movement of gold could become more distributed. New financial centers could emerge, regional markets could gain more influence, and the relationship between governments, institutions, and physical gold could enter a new phase.